I'm sure that has whetted your appetite for more. Well, iEquity gives you the opportunity to create high quality portfolios backed by solid research from none other than our institutional research desk, a team that caters to international and domestic institutions. And to tell us more about this, we have with us Mr. Nitin Jain, CEO, Edelweiss Wealth Management, and Mr. Alok Saigal, Head of Private Wealth at Edelweiss Wealth Management. Before I hand over, a brief introduction of Alok. Alok comes with over 20 years of experience in private banking, investment management, and corporate banking. He has been with the firm since 2014 and currently heads Private Wealth, which caters to ultra HNIs and family offices. In the past, he has founded and built a highly successful family office practice from scratch at Edelweiss and is credited with creating India's only distinct business vertical that caters to their needs. In the last 6 years with Edelweiss, Alok has essayed various leadership roles, including leading the product advisory team. In recent times, Alok has contributed to the successful equity raise at Edelweiss Global Wealth Advisory and has been a key member of several strategic initiatives. For our viewers, please use the chat box on your screens to ask any questions you might have during the course of the session, and we will respond to them at the end of the presentations. So without further ado, let me hand the stage over to Nitin and Alok.
Thank you, Sapna. And Nitin needs no introduction to this audience, but still I will attempt a small introduction. Nitin comes with over 2 decades of experience in financial services. He has actually essayed leadership roles across prop trading, wealth management, asset management, and our distressed asset business. Today, the size and scale in a lot of these businesses that we see is actually attributable to Nitin. But one of the things we all rely upon Nitin more than his business acumen is his thought leadership. A lot of the product innovation and ideas that we see today is all a lot of it is to Nitin. So thank you so much, Nitin, for taking time. And as always, I'll ask for the benefit of the audience here. Before I deep dive into the questions, I would like to thank all the clients and customers and our team. I have some good news to share. We have recently won one of the most prestigious private banking awards, which is the best private bank in India by Asian Private Banker. It is the most prestigious award in Asia Pacific, and it resonates, the faith and trust that all our customers have, shown in us over the past few years. So coming to you, Nitin, wanted to, understand from you, Edelweiss Wealth Management also seen, some development in the last 12 to 18 months. So we'll take your views on, the recent, we have welcomed PAG into Edelweiss Wealth Management fold, and also how the business has been and how do you see the business activity at Edelweiss Wealth Management. So over to you, Nitin.
First of all, thank you so much, Alok, and a very warm welcome to everybody on the call. I must say it's absolutely a pleasure to work with a team like you, Alok. So thank you for everything that you said, and congratulations on such a prestigious award. I think the last 12 months have been quite strange, to be honest. Right, started on a very somber note with a very steep lockdown and a crisis which is like once a century, and we were all very worried and concerned about how things are going to pan out. And I think I remember in the first quarter when we were looking ahead, things were looking quite bleak, not only for the businesses but also for the country. But to be fair, and I think when we look back now, it's surprising how things have turned back. And people talk about a V-shaped recovery. I have never seen anything like this, frankly.
Right.
I don't know whether this is really a pent-up demand coming back in such a vicious way, or this is something more structural. I think we'll have to wait and watch. But if you put a gun on my head and ask me, I think there is something more structural happening than just pent-up demand. You look at all the data points; they're showing a lot more optimism than any of us anticipated. Just to give audience some numbers in terms of how our business has done. I think we're hitting all-time highs in terms of our assets under management. Our engagement levels with our customers are at an all-time high. Our revenue numbers in the last quarter, 1 month, has been at an all-time high, which was unthinkable, right? Because we are still in the middle of partial lockdown. We are still not able to reach out to our customers one-on-one. And these are not products where we are able to, one would imagine that it's not easy to do consultative selling purely on an online basis. But how customers as well as people have evolved in such a short span of time is quite amazing. So I think overall, I would say, though the period of the last 9 to 12 months has been quite testing, but I think it's also a reflection of how resilient we are. We all of us are, and I think net we are all, I think, much better professionals in the last 12 months. And I'm very we should say that we are privileged and blessed to be working in a circle of people who are less affected, and hopefully we should make our own contribution to the society at large, because we can. So we will hopefully make that difference over a period of time. But overall, just to summarize, I think business is doing as well as ever. And I'm very, very positively surprised by that. And thanks to each and every employee on this call, each and every customer on this call. Thank you so much for all the support. Coming to the second point that you said on the PAG transaction, I must say, in the first quarter of this financial year, when we went out and we were scouting for a partner, we were very lucky that we had 4 or 5 of the world's best private equity firms, working with us and evaluating that opportunity. And I'm sure the names were there in the media, and so I don't want to name them. But the reality is we did a lot of due diligence, because this was like marriage, right? So we had to be very comfortable with the partner coming in, because it's not only about the valuation, it was also about the comfort with the operating team. And I must say this with the complete honesty and transparency, the kind of chemistry that we were able to build with the PAG team is outstanding. And the feedback that we got, not only from one company, but many companies which have been invested by PAG in the entire Asia region, the common feedback was that they have added tremendous value to those companies. And the operating teams were very, very happy with PAG as an investor. Their approach was very long-term, 10 to 15 years, unlike a lot of private equity firms which would think 3 to 4 years on the higher side, by the way. So that gave us a lot of comfort. They're a $50 billion private equity firm, and their track record is probably one of the best in the world. So given all of that, I think we chose to go with PAG. And I think if the initial days are anything to go by, I think we are very happy with our initial experiences. The transaction is, some of the people have asked me, how close are we to the transaction? We've got most of the permissions. The regulatory approvals in India are quite a maze. Structures. So the RBI permissions are through, partial SEBI approvals are through. We are expecting, hopefully in the next 10-15 days, all the other approvals should also get through. So we are hoping the new year should begin with a complete new structure, new organization, and with new vigor. So that's where we are on the PAG transaction.
Thank you, Nitin. We have you on the call, and you are somebody whose views we have valued over the years on markets and economy. And markets have been very strange, to to say the least, over the last, a year or so. We have seen Nifty at, 7,500, and we've seen Nifty at 15,000. And as
Right.
I said earlier just now, that,
Yeah.
we've seen some green shoot of recovery in the market. So where do you see, the markets and the economy headed from here?
I think before we talk about the markets, I think we should understand that let's talk about the business cycle. And I think after a very long time, I do feel that the business cycle looks very, very positive. And for me, there are two key indicators that I look at when you have to call the business cycle. One is the liquidity, the rates and the liquidity in the system, and the second is the optimism that you feel when you talk to the entrepreneurs.
Right.
And I think there is no such indicator, frankly, but it is basically the feel that you get, because we are all in the system. We end up talking to a lot of people, and I think we have smelt it. The kind of optimism that we are seeing in the community, in that segment, is probably at an all-time high in the last 10-15 years. I have not seen this kind of optimism, especially in the organized sector. There's still, I'm sure, 10, 15, 20% of the sectors which are very specifically hit because of the COVID situations, right? Because let's say malls in particular, some select, let's say, travel-related industries, theater, some SMEs. If you go down some unorganized industries, some export industries, etc. But by and large, organized industries are seeing the kind of momentum they have hardly seen in the last 10-15 years, and it's also reflected in the earnings. So if you see the Q3 earnings, Alok, it was 165. If you just multiply that by 4, that is 650, 660,
Right.
which is a 30% earnings growth over this year. And this year, the earnings grew at around 15% over last year. A 30% earnings growth I have not seen in India for the last 15 years.
True.
So this kind of business momentum is actually is a rarity, and I would not be surprised if we beat even 650 in terms of Nifty earnings.
Wow.
So the business momentum is very strong, and partially this is coming from a very, very long period of surplus liquidity in the system. Okay, and RBI, I think, did a fabulous job in the last 9 to 12 months, keeping surplus liquidity at very low rates, which has actually got into deep, should I say, pockets where it was really, really required to be, to reach, because otherwise a lot of manufacturing industries were not able to access this kind of liquidity. I was looking at some of the companies. They are able to borrow at sub-5 rates for 3 years in the manufacturing space, which is unheard of, right? I'll give you an example. There is a company that we own in our portfolio called Sapphire. Okay, Sapphire it's basically the owner of Pizza Hut and KFC, the franchisee in South and West. They used to do a peak EBITDA of 10 crores before COVID. Now they have started to hit a EBITDA of around 20 crores per month. We were struggling to increase the EBITDA by 10%. If the EBITDA was to go from 10 to 12, I would have been like, wow, the EBITDA has moved from 10 to 20. Okay, you are seeing real estate sales at all-time high. You're seeing cars selling at all-time. Now, I'm sure part of this is a bounce back, but I think these kind of changes cannot be just. So the business cycle is very strong.
Right.
Liquidity is available. Both RBI and government are completely aligned in terms of growth agenda. And I think this time the budget was like really outstanding. There was no tinkering with the tax structures. There was clarity in terms of objectives. So I think overall we are very positive on the business cycle. The only problem is that whenever something like this happens, the markets obviously factor in a lot more positive very quickly. So the valuations have reached really a valuation where all the good news has already got priced in, right? So even at 650, you are pricing it at 22, 23 times forward. And then it will cause its own set of volatility. So I think the year will be marked by volatility in stock market. But net, our bias would be to stay long. There will be a lot of money to be made in stock markets, in specific opportunities. A lot of money will be made in private markets. The business cycle is very strong, but the valuations are a little stretched.
Great. So, Nitin, I'll come to, iEquity now. I know this is an idea we have discussed a lot, and,
Yeah.
this is very close to your heart, and you've been instrumental in, the entire ideation to design, the actual product creation that has happened. So I would request you to take, our clients on the call through, the genesis and the idea behind, iEquity, and how did you come to think of it?
Yeah, you and I have discussed this for so long that as a platform, we have such deep capabilities in equities, and we have never been able to bring that capability to our wealth clients.
Yes.
And frankly, this is finally a culmination of that thinking and effort where we are bringing the best of Edelweiss Wealth Management, the best of Edelweiss actually, in terms of equities to our sophisticated clients. So I'm very proud of this product, where people like Shiv Saigal, Shiv Diwan, they are some of the finest minds in the equity space. We are some of the best research analysts in the country by a margin. They are rated like the top of the top in the industry, right? And we were not able to give that access in a structured way to our wealth clients. Now this product allows us to do that. One. So for me, this in that sense is a very big start. I hope our clients appreciate that. It has taken us a lot of effort to create this funnel. So one is this: it's a very differentiated product in a sense that to bring this kind of capability to individuals from institution has not happened in India ever before. So that's one. The second, Alok, has always been that I have wondered that, in the industry, there is very little customization of products. So, for example, in a mutual fund, a 5,000 rupee customer is managed as well as a 500 crore customer is managed in the same way, right? And hence, the mandate from a customer point of view to the fund manager is very generic. And hence, the fund manager is more, let's say, is not as agile, is more focused on the benchmark, and is just trying to say, okay, if I am in quarter one, quarter two, I'm all right. The accountability is lesser. The spark is missing because he's trying to maximize the assets under management. Yeah. He's not focused on performance in that sense because his agenda is very simple, and rightly so. We run a mutual fund ourselves, so we know how it works, right? So the agenda is different. Here we are talking about focusing on delivering value to our core client segment. So that's why I think better agility, very focused, trying to deliver value to our core customer segment. That has been the agenda. So more customized, more agile product to the customer. Third, I think, is bringing more transparency. Why we do what we do. Okay. Not only are you dealing with the best minds in the country, people like Shiv and all, they're also sharing why they are taking the calls they're taking, right? And it's also a core thesis of Edelweiss Wealth Management. So if you see whether it's our investment committee which does asset allocation in Infinity, we stick our neck out. We are not shying away and saying, okay, we did this, but we are not explaining why we did that. So every month, whatever calls we make, we give a rationale and we stick individuals' neck out and say, this is why we are deciding to do this. And sometimes we'll be right, sometimes we'll be wrong. And that's how markets work. But the fact that we put that out makes us more rigorous, makes us think 10 times before we take a call. And I think that transparency makes us more accountable. And last, I think, and I think it goes without saying, in this kind of a business, cost matters. This, in my view, will be the most cost-efficient active fund management product in the country, period. if you include the brokerage cost, this will be far more cost efficient than the direct mutual funds that we are able to access in India. So not only are you getting the best of the minds, more customized product, but you're also getting it at the cheapest possible price. Now, what else do you want? So I think it's a beautiful product, and it's all only available to our customers. It's not easily available to any other client outside of the wealth platform. I hope it sees tremendous success, and I wish all the best to our managers, Shiv Saigal and Shiv Diwan, who have really worked very hard to make this a success. So thank you both the Shivs, and look forward to a great success together on this one.
Thank you so much, Nitin, for your time today. And we really value the what you shared with us, both on the insights on the organization and the market view, and on iEquity. I'll hand over the floor to Sapna for taking it forward, the conversations from here.
Thank you, everyone. Thanks, Alok. Thanks, Sapna.